Hey everybody, good morning. How's it going? Welcome to a new episode of Stocks for Breakfast. It's Tuesday morning, October 5th, 2021. A lot going on the market today. We're getting a little bit of a bounce this morning, which is nice to see. Have a lot to talk about today. We're going to do a little bit of sector rotation today. We're going to dive a little bit into some of those stocks. We're going to talk about some short sales that are on the list right now, but we're also going to talk about Pepsi earnings. So we have a ton of stuff to talk about today. So just stick around. I'll be back in just 1 second. Okay, so as I said, thank you so much for joining me today. It is Tuesday, and we're looking for the market to catch a bid. Yesterday, we came into the day saying market had a nice bullish U-turn on Friday, which means that it traded through the previous day's low, reversed, and closed near the high. Now, if you watched the entire video yesterday, we actually had said that it was most likely short covering. And short covering happens after a move to the downside. People need to exit those trades, and that pushes stocks up because when you short sell, you're buying, and that pushes stocks higher. What we were looking for yesterday, if you remember, we had a lot of if this happens, then I'm doing this. If this happens, then I'm doing this, which, by the way, is the right way to script out your day and your week. Then we'd be looking to pretty aggressively start to build positions again. And hopefully some of those sectors that were working their way up the list, sectors such as the industrials, basic materials, looking for them to join the energy sector, as well as Dustin in our community today mentioned utilities are up on the list as well. So futures are kind of fighting back a little bit this morning. There's news, there's earnings. There's a new potential IPO that we're going to talk about in a minute. But what I'd like to do is I'd like to first thank everybody for being here. Catherine Goodson, good morning. John Bates, how are you? How are you, pal? Phil, good morning. Good to see you. And Carlos. All right. Yesenia, how are you today? Good morning. Let's see. Shane Eaton, good morning. And Kenton Kirkpatrick, good morning, everybody. All right. Hey, Don, how's it going? Abe, good morning. Good morning. Excellent to see everybody here this morning. We did have a question yesterday that I just wanted to address. A gentleman named Bruce had started asking some questions about buying versus selling short in these videos specifically. Hey, Brian O'Shea, what's up, man? And whether or not we actually discuss options trading opportunities. So Bruce, first, I just want to say thank you for watching the videos. I really appreciate it. I hope you're getting value out of them. But we do talk about options opportunities, but we discuss those more in the private community because obviously this channel is called Stock Trading Pros. So we mostly discuss stock trading opportunities. I also wanted to discuss one other thing, a comment that Bruce had mentioned, which was short selling ideas and how that would relate to either straight up short selling or how that would relate to options positions with a bent on the short side. So I guess really just to bring the whole point home, and I'm specifically speaking to Bruce A., probably 95% of our community, both here in our social media, as well as our private community inside the boot camp, probably 95% of the people that we speak to only want to be buying stock. Most people only want to be looking for spots to get long, whether it's buying call options and initiating spreads or straight out purchases and looking for longs, or looking to build positions in stock trading positions, looking to buy and looking for stocks to go up. So if we have 95% of our community likes to buy stocks, it really kind of doesn't make sense to spend a whole lot of time on that other 5%. We do mention short sales. We do discuss that. But I think it's much more efficient for us and for us to have these conversations around what most people want to talk about. So thank you for your comments, Bruce. I really appreciate it. We want to talk about something. Actually, John Lash, I don't know if he's on the call with us today, but he actually asked a pretty good question about yesterday. Actually, he asked a question about electric vehicle stocks, and we were mentioning CarMax earnings actually crashed, and because of their inventory glut and all that kind of stuff. And John asked a good question. I'm actually going to bring it up on the screen here. John actually asked, does the chip shortage affect electric vehicle companies? And this was pretty interesting. A tweet that came out yesterday by Kathy Wood, which obviously a lot of people following Kathy Wood. Tesla, which obviously blew away their numbers, obviously electric car vehicle company, And General Motors basically on the same day blamed the 33% year over year decline on the chip shortage. So she's basically saying what? EVs require 3 to 5 more chips per car produced. So I actually think that's pretty interesting and a really good question by John Lash yesterday. Kathy Wood, I don't know. She seems to know her stuff and she's on top of the game. A lot of people watch her. I thought something else that was interesting about Kathy Wood yesterday, and I guess this is part of the social media interaction. If you don't happen to know, she's obviously ARK Invest and the technology innovation funds and all that kind of. Oh, hey, John, good morning. I'm glad you're here. So I just followed up on your question. So it was actually a pretty good question yesterday, and actually pretty ironic that she answered it in that way. So anyway, we talked about CarMax and how they weren't able to get inventory and basically being blamed here and on the chip shortage. But we actually talked about it a little different way, which was basically they couldn't get titles to the cars. So two different. I just wanted to clear that up from yesterday. When we talk about CarMax and CarMax going down after earnings, my experience going into a CarMax in the last 3 months was that they couldn't even sell cars because they couldn't get the titles from the government because of the backlog of what's going on in the bigger picture in the world right now. This story about the chip shortage is actually completely different. So we'll talk about Tesla a little bit today. We're going to dive a little bit deeper into some of the other sector rotation, as we discussed. We're continuing to watch energy stocks. I don't know if LJ is on the call today, but we get a lot of questions about tracking the sector rotation. So when we pull this up at the start of every day, and I'll make it a little bit bigger if you want to take a snapshot of that right now. When we take this and pull this up every single day, it's beyond a shadow of a doubt the place that we start, the place that I start. When the day ends every day, it's literally the first thing that I post into our private community so that our members of our community can get a head start on where the smart money is flowing, where the buying and selling pressure is happening right now. Because remember, if you're a regular viewer of the channel, which I hope you are, and please, if you could do me a favor, if we're providing value, smash that like button and hit the subscribe button. This way that I know that I'm doing my job and making it worth your time to come. So what you need to do is then go into the sectors that we're posting and start to do a little bit of a deep dive. So LJ, this is for you and for a couple of other people. Oh, wow, Catherine, that's super interesting. That's super interesting. Wow. Oh, I didn't know that was a spinoff of Circuit City. Wow, that's pretty cool. I didn't know that. So anyway, so I wanted to point out something that went on in our community. And I'll make this a little bit bigger in a second. So we get a lot of questions because I put a lot of emphasis on order flow. I put a lot of emphasis on tape reading. So the 3 pillars of what we do is stacking the order flow, obviously, tape reading, foundations and tape reading. And then the third one is risk reversal. So those are kind of the 3 core pillars of what we teach in the boot camp. But it's, order flow starts out with the big picture of the market, and then we kind of break it down into the individual sectors, and then we go deeper and take a look at which of those stocks. So I'm going to make this full screen so you can take a look at it. This was actually put up by one of our members, Dilip, who does all this kind of geeky data stuff, which I absolutely love. These are the kind of things when you go behind the scenes, it's really interesting. So I'm going to make it bigger so you can take a screenshot of it, and then I'm going to come back. Okay, let's take a look. And I'll make it a little bit bigger. So what you can see here is he's actually doing a breakdown on a day-by-day and obviously a week-by-week trend of where the money is flowing. And he's just really on top of where it's going and the trend of where the money is flowing. And you can obviously see that energy has just lit it up for a while now, and you can start to see how long they've been lighting it up. So the point that I want to get across here, and it's actually what I wrote when I sent out our daily email this morning, is that all of these little things, everybody just tell me the one thing that I need to be, to act like a stock trading pro, to feel like I'm confident. And it's not the one thing. Now, we just broke it down to 3 pillars. Again, it's stacking the order flow, which is the market, the sectors, and then those industry groups, and then how long that's happening. Then there's reading the tape, which is putting the pieces together to justify risk. And then there's reversing risk, which is understanding position sizing and working orders and that kind of stuff. All of these little things, it's not really one big thing. It's all these little things that add up to this really strong rope that gives you conviction. So I know, LJ, you've asked a few questions about it. This is kind of the way one of the members of our community does it, where he literally goes in and documents it every day. And it's really these little things that going the extra mile of building this stuff out and then making it actionable. Again, like we talk about every day with the rotation sheet. Hopefully you pull the sheet down, you take a look at it, then you do a little bit of a deeper dive and you start to find those ideas. Now, one thing that I think is pretty interesting, we mentioned the energy sector before they started to break out. While they were kind of still in a downtrend, they started going sideways, and then they broke out. And we started out doing that when we're looking at the major sector ETFs. And you know what? Let me actually give you, I'm going to pull it up on the screen for you. Let me bring it in. And if you're not using Finviz, this is a pretty cool website to bring in. So I'm going to bring this into the screen. And this is the major list of ETFs that I have on my radar every single day. So if you want, you can take a snapshot here and get the list. So you can see it's broad across the board and all different industries. So what you'd normally do is if you want, again, take a snapshot of this so you can take a look at it. Go into performance, and let's just use the last month, for example, and we'll just take a look. And you can see, obviously, energy sector and oil. And then you kind of drill down a little bit more deeper and you see where those opportunities are. So LJ and everybody else, when we're looking to dive a little bit deeper into these lists, it's just really a matter of going the extra mile. And LJ, I don't know you probably work super hard. I'm not implying anything. It's just going the extra mile to spend that little bit of extra time at the end of the day to kind of input it. I know we kind of get, we have so much technology available to us right now, but kind of cool to be able to go in there and track it day by day. And we actually had a call about this on, we have a weekly coaching session every Monday night. Well, actually we have multiple ones, but the Monday night one always runs, usually around 90 minutes where we go back and forth with the questions. And by the way, Catherine, if you didn't happen to watch the replay is available now. It's inside the forum. These are the kind of things that we discuss about how do I make what I do more efficient. So last night we talked about how to do research. We talked about how to organize the massive amount of information flow that comes. And this is the next part of it, where even if you don't have fancy technology or some service that will do this for you, we literally kind of dig in there. And the reason I keep pointing out LJ, because I hope you don't mind, you keep asking the question and I want you to have the answer that is actionable for you, is when you start to do this on a regular basis, you start to input these numbers at the end of the day. And you take that extra 10 or 15 minutes, and I hate to use this word, but it's the right word to use. You start to get a feeling of what's going on in the market even before you start to go in and look for stocks to buy. So you get a feel for which sectors are breaking out. You get a feel for if anything is breaking out, which will also influence your targets. It'll influence whether you're going for 2-to-1 versus 3-to-1 or more than 2-to-1. It'll influence whether you should be in cash or not. Or if you drill all the way down into, no, I'm only going to focus on energy stocks right now because those are the stocks that are breaking out. So what I'm going to do right now, I'm going to pop a few of those on the screen right now. Let me actually minimize this. And let me just pull up the charts, because that's pretty much everybody wants to come here and discuss today, right? We're going to talk about this in a second as well. But getting into some of the energy ideas that we've been focusing on this week specifically, and I'll bring them up for you right now, is I want to give you a list, because that's really what everybody actually wants right now, is just tell me the stocks. So we're going to start out with CPE. Okay, so you could literally see here, this is probably the poster child for the stocks that we're looking at, where they were in a downtrend. They broke the downtrend here. They confirmed the downtrend. And now you have a couple of weeks of good trading here in CPE. MTDR, again, we're just sticking with what's working. Again, if we start to work the charts and we pay attention to when they broke, okay? When they broke and where did they come from? And then where did they come from? And where does it confirm? Almost exactly in the same spots. And you have roughly $10 of good trading there. Devon Energy is another one that is perking up very cleanly. FANG, which I know is a popular one in our community, another one. FANG, actually, this is actually a pretty awesome one here, where it broke here, right? This obviously very simple to notice here at Head and Shoulders bottom, right? Here's a shoulder. Head, a shoulder. I generally don't trade those, as I mentioned, but they're obvious. I like to point them out to everybody. And then actually, this is really what I'm watching more, the trading range that it broke out of. This is actually the most fascinating one, because it pushed paused right at resistance and took off again. And you can see one of the things, if everybody reads, if you've ever read Reminiscences of a Stock Operator by Justin Livermore, he actually is very adamant. And he says that you usually find surprises in the direction of the line of least resistance. So when you see pauses and explosions, like right now, FANG is up $1.52 pre-market, that usually happens in the direction of the least resistance. So it's our job to read that order flow and put those pieces together. So I just want to give a couple of more stocks, and then I'll answer a couple of questions in a second. So FANG is in there. COP is in there. LNG. Okay. And we'll finish up with PSX, which is actually just starting to break out now. So those are the ones that we're starting to watch. Some of them are taking off now. Some of them are already at new levels. Let me see. I just want to get to a couple of questions here. How would you adjust your scan setup if looking for short opportunities? Okay, that's actually a great question. We'll take a look at that in a second. Let's see. Good morning. Is the boot camp for swing or day trader, and are they recorded? Yes to all of that. Let me actually come back on the screen. Boot camp actually is for day trading and swing trading, and we do have an options channel in there as well. And actually, Catherine's in our swing trading community. We spend a lot of time on both. The boot camp is designed for active trading, and we talk about day trades. We talk about swing trades. We give the exact entries. We give the exact targets. We give the position sizing, both for day trading and swing trading. We have right now 24 hours worth of online recorded video. I don't want to turn this into a sales pitch, so please, if you want to find out about the boot camp, you can click the link below. But I want to answer the question. Everything we do is recorded. So, for example, the coaching call that we had last night was 90 minutes. As soon as that call is over, that goes into the archive, and everybody has access to watch the coaching calls in case you can't attend. So, absolutely for both. Okay. Let's see. Would this be a day trade or swing trade since it's been running so long? So, Gator. The answer to that, and it's a good question, because stocks that are a swing trade can be day trades, but stocks that are day trades aren't necessarily over swing trades. So if you remember the three pillars that I just went across, which was stacking the order flow, tape reading, and risk reversal, the tape reading part of it is after you pick a side, is it a good time right now to buy? So in other words, how much has the stock traded recently? So if we get into the ones that we just looked at, and this is probably a good example right now, CPE actually does have some resistance up in this area, probably around 59. So it's got about $3.5, $4 more. So the question comes in is, if the stock rallies like this for 5 or 6 days in a row, what are the odds of follow through after that? What are the odds, if I'm going to swing trade this stock, of, for the amount that I have to risk, how much expected profit, or even better, how much probable profit is on the table after a stock goes up 2 days versus after a stock went up 5 days? Obviously, probably after it goes up 5 days, the odds of it continuing are lower. Doesn't mean it can't, but we're trading for what probably happens. Remember, our job is to know what probably happens next, but what we're definitely going to do. So that tape reading, that middle pillar in there, which is reading the tape, is timing our entries and determining position size based on the probability of hitting our target versus hitting our stop loss. So day trade or swing trade, since it's been running so long, that's the key. And the trade management part of it is looking to the left. What does the stock normally do? What has it done recently? How many days in a row has it been well bid? How many days has it been well bid and closing near the highs? And again, if you're new to the channel, again, please click down and subscribe. Give us a thumbs up. But the terminology, the well bid, means higher highs and higher lows. So if we're looking right now at CPE, it actually did pause over here. So it actually did pause here for 4 days. So today is the second day of this move. The last move actually went 1, 2, 3, 4, 5 days and then reversed. So right now, this is only the second day into this move. So I think that you could day trade or swing trade CPE right now. At least that's what I'd be looking to do, up to that 59 level. So Catherine brings up a good point. Looks like it's hitting a supply zone, so maybe take a pause before going higher. Now, you could definitely make an argument that this resistance right here might be the one that Catherine's talking about. And Catherine, that probably is the one you're talking about, right? So really what it comes down to is when you look to see where, as Catherine's calling it, supply zone, or where sellers came in and did something significant, how long did it stay there? How significant was it? By how many times did they try and push through and come back, push through and come back? And we'll actually use Penn as an example, where Penn was a stock that we were looking to buy the breakout here, but we said, let me get that off the screen. Not yet, because sellers came in and smashed it. So 5 different times sellers came in and smashed it. So we didn't get long here because it never closed and didn't go bid above that level. CPE, a little bit different here. It was here for a couple of days and then sold off hard. So you could make a case that this might be the next short term, a lot of people might call minor resistance, or all the way up here at 60. Either way, what I do know right now is that this is only the second day into this move. And as we've discussed, this is the strongest sector by a mile across for the week, the month, the day, the week, and the month. So as of right now, and again, this is kind of exciting because this is kind of like a little bit of a deeper conversation. Is there resistance there? Is there a selling zone, as Catherine pointed out, up in the 54 area? 100%. But then you build the argument. You justify accepting risk. You build the case for accepting follow through, or what are the odds of follow through? So we have the stronger sector right now, one of the stronger stocks in that sector right now. So now you have to ask yourself, do I get out of this trade or not believe it's going to follow through because of that resistance? Or do I add all these other pieces up, expecting it to maybe hit that second target because it's in the stronger sector? It's one of the strongest stocks in the strongest sector. It's got good volume and it's gapping higher. And there's more news this morning about oil prices and all that kind of stuff. So all of that goes into the equation. Could it stall there? Possibly. As of right now, it's just slightly above it. But as Catherine pointed out, it's something to pay attention to. And again, if you go back to what we started talking about today, it's not one giant thing that you need to learn. It's these little things, little habits that you build that make you into a better trader who expects to get paid because you're doing the work and you're putting those pieces together. So I want to hop over and I want to go into some other ideas because we talked about basic materials. So if we walk up the list, basic materials and industrials, and we get a lot of questions about, well, they're not in bullish order flow yet. And of course they're not yet. They're not at the top of the list. They're still red, but they're working their way up the list. So this is where we start to dive a little bit deeper and we start to go into, let's say we'll start out with industrials. So we start to work our way into industrials and we start to look at some of the stronger stocks in the industrial sector. So looking at paychecks, bullish gap, holding the gap for 3 days right now. Some resistance here at 118, but a stronger one in the stronger sector. SPR. So you can start to see now why the industrials are starting to perk up on the list. This broke the downtrend, rocketing higher, got through all of this resistance. I would have said here around this $44 level was the level. And now you can see, as Catherine worded before, we got some, what was the terminology? Supply zone up here around 53. So this still has another $7. So you start to work your way across. UAL actually broke out recently. Broke out, pulled back, paused, bearish U-turn yesterday. So strongest sector, starting to work the trade, has some room to go to the upside. LUV actually had some good news the other day. ALK, so you're starting to get a feel. CAR. So CAR. So this is a point that I want to get across to everyone, okay? Finding ideas that meets the criteria doesn't make it a trade yet. So we're noticing the rotation into industrials. We're noticing the rotation into basic materials. And probably Elco is one of the top ones on my radar right now. Then you go in and you start to find the best ideas right now by stacking the order flow, by reading the tape, by reversing risk and having the right position size. All of those little pieces add up to which ones are a trade right now versus, as we talked about yesterday, which ones go in the tracking journal and we set alerts for a future trade if it gets to that price or a certain price action unfolds, versus which ones go into our trading game plan today. So we have roughly, if I'm looking at the list right now, we have roughly about 20 stocks in the trading game plan today. And then as the market opens, we whittle those down to which ones are performing the best as the market opens, okay? I just want to answer a quick question about, well, actually, let me go through a couple of things here. This article in the Wall Street Journal, pretty darn interesting. Guy talking about opening up, whether the market should be open 24 hours a day. I don't believe they should. If anything, I think that we should get rid of the dark pools and all of those other things. So all the trades are actually happening in the same place. But 24 hours is not a good idea because there just isn't the same liquidity over 24 hours. And a lot of people don't understand that, yes, you could trade after hours even right now, but the bids and offers and the ability to get in and out where you want to is just not the same during regular market hours. So I think this is super interesting. I don't think it's a good idea. I don't know if everybody here has ever used the website Udemy. Udemy is actually applying for an IPO, which is pretty interesting. Very big website for online education and training. So that was pretty interesting. We've been talking a lot about the electric vehicle stuff today. Morgan Stanley downgraded Lordstown Motors. The symbol is RIDE, R-I-D. I can't see it there. Down to $2. So that's going to be something interesting to keep an eye on today as well. I'm going to wrap it up here with Pepsi. Pepsi actually raised guidance, and last I looked, it was trading flat, and it's actually now up $1.80. So Pepsi having a catalyst today as well. So I just want to talk about, there was a question in here from Alvaro about, where was it? How do you adjust your setup if looking for short opportunities? So remember, the three pillars are stacking the order flow, reading the tape. So stacking the order flow is which side and how obvious is it. Reading the tape is timing your entries and exits, and risk reversal is having the right position size and learning how to work the order. So if we are using, let's say we're using Finviz, and we go into our template, which again, I talk about the template all the time, which is $15 average true rate. Let me actually make that bigger so you can see it. And over 2 million. And obviously I'm only looking at stocks right now. So 225 stocks meet that criteria. So minimum criteria is I want to know, which stocks are bearish right now. And that would actually start out with stocks underneath the 50-period moving average. So that brought that down to 150. I'd want to know which stocks are weak over the last week. Excuse me, down, week down. So that'll bring it down to, still 142 stocks. So think about that in the big picture of the market right now. 142 stocks are down for the last week and also below the 50-period moving average. Now we can start to work that list even a little bit more. We could say which stocks closed down by 1% yesterday and which stocks closed down by 2% from the open. And that brought it all the way down to 60 candles. Then I'd probably zoom it out a little bit more and I'd start working this. And then I'd start to go into the charts to see which stocks have room to go, which stocks are extended too far that I wouldn't be looking at. And again, this is where you start to put all those pieces together. So Alvaro, that's how I'd start to work it. Let's see. PSX looks more promising from a risk reward perspective. Okay, that makes sense, Lewis. Thank you. Let's see. Is there a rule of thumb to calculate risk? For me, yes. For me, well, there's actually two different parts of risk. There's the dollar amount that you're willing to risk per trade, and that's a pretty standard calculation. And whether you're using fixed fractional formulas, whether you're using fixed ratio formulas, there's a bunch of different ways to do it. But generally speaking, you use a percentage of your account that you're willing to risk per position. So let's just say, for argument's sake, you have a $20,000 account. You risk 2% of that $20,000 on that trade. But then the risk on the trade is different. So there's money management and risk management. They're not the same thing. A lot of people confuse them. So once you decide the amount you're willing to risk per trade, and I just gave an example, then you decide how many shares you want based on the difference between the entry price and the stop loss. And those are the formulas that I generally walk everybody through in the boot camp. Okay, let's see. For up moves, does institutional buying on Finviz add confirmation? That's a very general statement, but there's a lot more to add to stacking the order flow, but it certainly helps. It absolutely. And if you know Charles, I'm sure you know, if you read William O'Neill's book, which I happen to have here, right? One of the symbols inside of CanSlim, his phraseology, the I is actually institutional ownership. So institutional buying, certainly. But just to take that a little bit deeper, Charles, let me get back there. One of the things that matters is you really want to start to put the pieces together, because just institutional buying is not enough. You still need to understand, am I buying at the right time? Am I buying the right position? How long have stocks been going up? And I'll give you a good example, actually. One of the stocks that we've been watching recently, let me actually just lower this a little bit here, is IBM. IBM, now, if you look at it, it just recently started to break to the upside over the last few weeks. But prior to that, it's been in a downtrend since June. So bearish order flow has kind of been dominating the stock. So yes, there's institutional buying right now, but how long has that institutional buying been going on? And actually, how does it influence us? So if we're looking at a stock where there was room to go and institutions just started buying, remember, we talked about this probably about, I don't know, maybe a week or two ago, where we broke down if it's our job to piggyback the smart money, our job to spot the order flow, then you want to take it a step further to the left and say, well, how long has the smart money been buying the stock? How long has the smart money been selling the stock? But let's stick to the buying opportunities. If the stock was in a bearish order flow for months and the stock just started to go up right now, and IBM's a good example of that right now, well, they've just started to build their position. So getting back to the risk question, who was it? Mike S. The risk has to be commensurate with the quality of the order flow. So if you think about it, so let's say you had a friend. Let's say you had a friend who owns a hedge fund, and just general topic here, right? Let's not say anything other than that, just a general topic. And you're having a conversation, and he's like, yeah, we just started building a position in XYZ stock. Our research is awesome. We like it heading into the next quarter or Q4 at the end of the year or whatever it happens to be. And they just told you, we just started building that position. Should you go in there and be like, yeah, I can't wait to size up on this thing? No. That's where the last part of risk reversal is in our three pillars. Risk reversal is understanding how and when to get up to your full position sizing. So all of that goes into. So Charles, that's a really good question. Is there a time I ever buy pre-market? Well, let's put context on that. I'm trading for 21 years. In our community, and there's a lot of members here in our community, I don't recommend new traders trading pre-market. I don't recommend new traders trading after hours. So, it's like, how much experience do you have to give you the answer? If I had to give you a blanket answer, I don't recommend, I don't suggest, I don't coach our new members to trade pre-market or post-market for the reasons I said before, because the liquidity is just not there. It's a very, very different market. Volatility is up, liquidity is different. So if I was giving advice to my nephew, I would tell him don't trade pre-market. I would say just wait for regular market hours. The charts are cleaner, liquidity is better, and you can handle the volatility because you can get in and out where you want to. But a little different when, if you're speaking to somebody who's been trading a while, everybody has different skill levels who's on the call right now. So that answer is, it's kind of like, hey, when should I drive fast? When you can, let's see. Not much left on the CPE for a swing trade. Yeah, I don't know if I disagree with that. I mean, we've been talking about it since the breakout down here, which is in the 34 area. So we are talking about maybe there's another $4 or $5. So that's actually, Kevin, you probably, from a new swing trade perspective, you would certainly have to reduce what you're willing to risk on the initial position. Again, that's the risk reversal part of it, having the right position size for what's left on the trade. But, this is kind of an advanced thing. So even if it's not left, there's not a lot left there for a swing trade. There's two things. You could reduce the amount you're willing to risk on a swing for the amount of profit that's left and maybe trade it for the next 2 days. Or if you're a day trader, you can day trade it up to that level, buy and sell it today, get out today, buy and sell it again up to that next level, which we call a bullish echo. All right. So good point there, Kevin. Appreciate it. Let's see. That Mark Minervini interview, that was awesome yesterday, right? Yep. Very good. Very, very good. All right. Okay, everybody. We're actually going to call it a day. I have to start getting ready over into the other meeting. So again, hopefully you took a snapshot of everything that we went over today. If you didn't, I'll just put it up here again one more time right there. Let me make that a little bit bigger for you. You can take a snapshot on that. We talked about a bunch of energy stocks today. We talked about industrial stocks today. We touched a little bit on basic material stocks today. So we're going to head on out. Jason Miller, awesome to see you today. Amit, thank you for being here. And Nitesh, thank you. LJ, awesome. I hopefully I got that answer for you, right? So anyway, smash that like button. Let me know that I'm helping you. And thank you so much, everybody. Have an awesome, awesome day. I'll speak to you soon.